देखो, मुझे पता है तुम सब अभी किस फेज से गुजर रहे हो। एग्जाम्स बिल्कुल सर पे हैं, सिलेबस किसी पहाड़ जैसा लग रहा है और ये अकाउंटिंग थ्योरी वाले चैप्टर्स देखकर ना सीरियसली दिमाग घूम जाता है। इट फील्स लाइक एब्सोल्यूट टॉर्चर, राइट? But what if I told you that this specific chapter, Chapter 4, Accounting Standards, Concepts and IFRS, is actually the ultimate cheat code to understanding how the entire business world runs? Yes, seriously, I'm right here like your trusted senior and we are gonna navigate this board exam stress together. We'll decode this whole thing step by step. So just relax, take a deep breath and let's get into it.
एक सच बताऊं, the biggest, absolute worst mistake you can make as a student right now is memorizing these rules blindly. Rote learning? रट्टा मारना? वो यहाँ बिल्कुल काम नहीं आएगा. You cram it tonight, you forget it tomorrow morning, and then you just freeze in the exam hall. But listen, if you actually understand the logic behind these concepts, you won't ever need to cram them again. This explainer right here, this is gonna save your exams. By the time we finish, you'll be writing these answers from pure logic, not memorized fluff.
Okay. So here is our game plan for today. First, we tackle the ultimate accounting mess. Then, accounting standards the fix. After that, why we need IFRS, followed by Indian GAAP versus IFRS, and finally, implementing IFRS in India. Zero fluff, pure exam-saving concepts. Ready? Let's go.
Section 1. The ultimate accounting mess. Now, I want you to imagine a college hostel. Imagine a hostel where there are no wardens, no curfews, and absolutely everyone makes their own rules. One guy is sleeping at 4 a.m., another is playing blasting loud music at 5 a.m. Total chaos, Hannah? Well, that is exactly what the financial world would look like without standardized accounting principles. Every single company would just invent their own profit numbers to look good. Total disaster.
And this brings us to a really harsh reality check. There is this viral music video by Violin Music, and there's a line in it that goes, "Padhai gani kam aina, deki 300 ki dihadi de tota." Basically saying that all that bookish theory is completely useless when you face the brutal reality of the real world. And that applies perfectly to accounting. Theoretical studies and raw data, they are absolutely useless if you don't know how to practically apply the rules in the real world to track actual money. You can read all the books you want, but if you don't know the ground rules of how a business records its cash, you're lost.
So the crucial point is, how do we fix this chaos? Enter GAAP, Generally Accepted Accounting Principles. Simply put, these are the house rules of business. Just like how a hostel needs a warden and a strict timetable to function properly, a business needs GAAP to ensure consistency. It's the foundational rulebook that prevents total financial anarchy. Without GAAP, Reliance and Tata could calculate their profits in completely different ways, and you, as an investor, would just be sitting there confused, trying to compare apples with oranges.
Now pay attention to these key GAAP concepts from your syllabus. Listen carefully because these are guaranteed exam questions. Let's rapid fire through them with some everyday analogies. Accounting entity, that just means the business and the owner are two different people. If you buy a personal iPhone using your dad's shop's money, that's a drawing, bro, not a business expense. Money measurement? If it can't be measured in rupees, you do not record it. You can't record the loyalty of your employees. Matching principle? This one is like matching your monthly pocket money with your monthly canteen expenses. You match the revenue of the period with the expenses of that same period. Simple, right?
By the way, inside GAAP, we have two main bases of accounting: cash basis versus accrual basis. Let me make this super relatable. Let's say you paid for a Netflix subscription, but 3 of your friends owe you their share. Cash basis says you only record the money when your friends actually hand you the physical cash today. Accrual basis says, now, transaction to ho gaya na, they owe you, so you log that income right now, even if they pay you next month. And in the real corporate world, accrual basis is the absolute king. Remember that.
Section 2. Accounting Standards. The fix. So think of GAAP as the general moral values of a society. But accounting standards, they are the official syllabus. They are the strict cheat code that formalizes all the chaos.
If you read the dry textbook definition, it says written policy documents issued by expert accounting bodies. Ugh, boring, right? Let me translate that into human language. Accounting standards are basically a standardized marking scheme for businesses. Imagine if CBSE or ISC didn't have a marking scheme. Every examiner would just give marks however they felt like. Same with companies. These standards dictate exactly how to recognize, measure, and treat financial transactions so that every company passes the exam the exact same way.
So why do we care? Because of their utility. These 4 points are literally a 4-mark question waiting to happen.
Accounting standards bring uniformity, but more importantly, they reduce financial manipulation. They actively stop companies from faking their financial report cards. If a company is failing, they can't just magically tweak the numbers to look profitable, because the accounting standards will catch them red-handed. It ensures total transparency and makes financial statements easily comparable across different companies.
Honestly, Batana, drop a comment right now and tell me, who here thinks that the accounting rules we use in India work exactly the same way in the US or the UK or Japan? किस-किस को लगता है कि rules globally same हैं? If you said yes, you are falling for a massive trap, because the reality is very, very different.
And that brings us to Section 3, why we need IFRS. देखो, Indian accounting standards are great for India. It's like playing gully cricket. You know the rules, your neighborhood friends know the rules, ek tappa out works perfectly fine there. But what happens when you want to play in the World Cup? You can't take your gully cricket rules to Lord's Stadium, right? You need international rules. That is exactly what happens with globalization.
When Indian companies like Tata or Infosys want to expand globally, or when foreign investors want to pump millions of dollars into Indian startups, they look at our Indian accounts and say, wait, what is this? We don't understand your local rules. That's exactly why we need IFRS, International Financial Reporting Standards. It's the global language of business. It brings consistency and comparability across international borders. So a guy sitting in New York can instantly understand the balance sheet of a tech company sitting in Bangalore.
Now pay very close attention to the fundamental assumptions of IFRS mandated by your syllabus. Listen carefully, because there's a slight twist here compared to our regular GAAP. We still have going concern, assuming the business will live forever. We still have accrual, but notice those last two, measuring unit and purchasing power. IFRS actually takes into account that the purchasing power of money changes over time due to inflation. This is a massive upgrade from traditional local rules. It's hyper-realistic. Okay, get your pens ready. Section 4, Indian GAAP versus IFRS. This is the most critical exam topic. Whenever you see a question on this, I want you to instantly visualize that classic line down the middle of the page comparison chart. Let's break down the core difference.
This right here is where the main clash happens. Indian GAAP, our local rules, heavily relies on historical cost. What does that even mean? Well, if you bought a piece of land in 1990 for 1 lakh rupees, your books will still show it as 1 lakh today. Even if its market value is 10 crores, it's super conservative. But IFRS, it relies on fair value. IFRS says, come on, be realistic. Show the current market reality. It updates values to what they are actually worth today. It's a massive shift from looking at the past to looking at the present.
एक सच बताऊं और बिल्कुल ऑनेस्टली जवाब देना, किस किस ने इन डिफरेंसेस को लाइन बाय लाइन वर्ड फॉर वर्ड रात भर रटने की कोशिश की है? ये मिस्टेक बिल्कुल मत करना, because if you just understand the logic that Indian GAAP is conservative and looks at the past, while IFRS is global, modern, and looks at current fair value, you can generate 5 difference points on your own during the exam. Stop memorizing, start visualizing.
Section 5, implementing IFRS in India. So if IFRS is so amazing, why didn't India just completely delete our old rules and instantly switch to IFRS overnight? Well, the reality of how this transition actually functions within the Indian system is a bit more complex than just flipping a switch.
Think of this process like an easy-to-follow staircase. First, our accounting bodies had to truly understand the core IFRS guidelines. Second, they compared them with our existing Indian GAAP to see the gaps. Now, step 3 is the most important one. We decided to converge rather than fully adopt. And step 4, we executed a mandatory phased rollout, starting with the big companies first, based on their net worth.
Let's expand on that convergence point, because it is absolutely crucial for scoring top marks on the India and IFRS syllabus topic. We didn't just copy-paste the international rules. Why? Because the Indian economic reality is unique. We have different laws, different tax structures, a totally different business environment. So we took IFRS, tweaked it to fit our DAISY needs, and created a hybrid called IND-AS, Indian Accounting Standards. IND-AS is basically IFRS, but with an Indian passport. It keeps us globally compliant without breaking our local system.
So, the ultimate cheat code here? Once you understand the why we needed rules, why globalization forced us to upgrade, and why we created IND-AS, suddenly this boring theory chapter becomes a powerful, logical story. Accounting isn't just about math, it is the global language of business. Once you learn how to speak it, you are no longer just cramming for a board exam, you are literally learning how billionaires read the world.
Okay, let's wrap this up.
If this breakdown finally made Chapter 4 click in your brain, hit that subscribe button and share this explainer in your college WhatsApp groups right now. Save your friends from rote learning. But before you go, I want you to think about this. If the entire world is moving toward one single financial language, what happens to the companies that refuse to adapt? Will they survive the next decade, or will they become completely obsolete? Think about it. Keep crushing those exams, and I'll see you in the next one.